Now I will request our brother Sri Nikesh to deal with the issues to achieve things, please. Thank you.
Good evening, everyone. Before starting, I would like to thank the sir and the committee members to give me this opportunity to express my insights on the Union Budget 2024. Mostly the provisions have already been read section-wise by sir. I will try to recapitulate certain important amendments that has been carried out as a finance minister. Now, while I was going through the budget, it was more sounding towards Bihar and Arunachal Pradesh. So, before while I was going through that particular budget, the direct tax amendments that were carried out, I would like to know from you people if you define in one word, this particular budget. Let us make this session a little interactive one. How would you define in one word this particular budget? Anyone? So there are certain draconian provisions also which are there in the budget. Again, there are certain welcome moves also which has been carried out. Let us go through and let us just recapitulate as to what are the amendments that has been carried out. As sir has mentioned that overhauling of the whole direct tax code probably it will be introduced, right? So right now bringing such sea changes, I don't know what is the need for it when direct tax code is in line, is already in pipeline. So basically, the changes have been much with regard to the TDS provisions, the charitable trust, the capital gains assessment and reassessment procedures, and search assessments. So there are certain announcements which are not a part of this budget clauses, but they are the part of his speech. They are the part of her speech. So she has said that certain SOPs for TDS defaults will be there. So maybe by mechanism of CBDT instruction that can be carried forward in the near future. As sir has explained that the monetary limits has been enhanced while a department is filing an appeal before income tax tribunal or High Court or Supreme Court. So the monetary limits before while filing an appeal before income tax tribunal was 50 lakh, it has been increased to 60 lakhs. For High Court it was 1 crore, it has been increased to 2 crores. And for Supreme Court it was 2 crores, it has been increased to 5 crores. So these are certain welcome moves that has been there in the budget. Probably it will be coming by the CBDT instructions. It is not a part of the budget, it is a part of the announcements. She has also expressed that CIT appeals that will be expeditious and there will be more officers included so that the CIT appeal can be disposed of, CIT appeal cases can be disposed of in an expeditious manner. So let's see how things can be moved forward. There is again Vivad Se Vishwas Scheme 2 that has been launched in this budget, and I would again say that is a welcome move because there are so many pending cases that can be, and Vivad Se Vishwas Scheme 1 was a hit scheme as it has been explained by the memorandum itself. So probably Vivad Se Vishwas Scheme 2, let's see how, because it has not been yet notified. However, the specified dates is 22nd July. So if you have a pending case before 22nd July 2024, only then it will be applicable. So the scheme, let the scheme be notified, then maybe we can give more insights to the related Vivad Se Vishwas Scheme. Coming to the capital gain amendments. Capital gain amendments, there are certain draconian amendments that has been carried out. First, I would like to highlight the buyback amendments that has been taken care. So basically the provisions, there is a cut-off date. The cut-off date is 1st October 2024. So before 1st October 2024, if there is any buyback, then the provisions that is right now applicable, those provisions, the taxation will be done as per the provisions in today as it is applicable. But after 1st October 2024, if the buyback is taking place, then again there is a provision where, let's say, the whole gross amount. So suppose there is a mathematical for example also which has been illustrated in the memorandum I was going through, and what I was able to understand is, let's say suppose you have purchased a particular, you have bought back a certain number of shares. The gross amount will be taxable right now. You will not get any cost, that will not be deducted. So it is actually a notional income that will be taxed now, and whatever the loss that is computed, that will be, you can carry forward. And if let's say suppose there is an income in future, then you can set off the loss in buyback. So this is the provision which I feel it is actually a draconian provision right now. Taxing the taxpayers on notional income, I don't think that this is a valid move by the finance minister. Coming to the period of holding, as I was saying, that now there are only two periods of holdings. One is 12 months, another is 24 months. 12 months is absolutely applicable for the listed shares or listed financial assets, and 24 months is for other assets. So let's say suppose you are having land and building or jewelry, the period of holding, if it is crossing more than 24 months, then it is a long-term capital asset, and only then there will be long-term capital gain. So there is only two periods of holding that will be a determining factor: 12 months and 24 months. Now, let's say you have a short-term capital gains. Short-term capital gains, again the rates have been increased for listed financial assets. It's 20% now. Previously it was 15%. It has been increased to 20%. And again, long-term capital gain, I was just discussing with sir. Before starting only, he was like, long-term capital gains now it would be very much difficult for the SSCs who are having inherited properties. Think about it. Let's say the indexation. There is the indexation benefit that was given to the taxpayers, that has been removed, and now a standard rate of 12.5% will be applicable for long-term capital gains. So this is again, I would not say a very much welcoming move. That is why I think that was reflected in the share markets also. And moreover, the cutoff date for these provisions is 23rd of July 2024. So yesterday was the cutoff date. So from now onwards, for example, there will be any long-term capital gain, you will be taxed at 12.5% rate from now itself. So again, this is and in the coming return, I was talking to sir that the long-term capital gain was actually will be calculated in the two-phase manner. So this will be again, I would say a harsh step to the taxpayers. There is again one amendment, small amendment in relation to gift. So previously in section 47 there are certain transactions which are not regarded as transfers. So in that the corporates have been removed. So previously corporates also, if they used to give that particular transaction, the section 47 used to incorporate corporates, but now only individual and HUF is applicable. So corporates have been removed. This is okay. This is, I think, there's not much to say about it. Reassessment and search assessment, sir has dwelt in detail. I will just highlight a few aspects to it. Section 148, we have all seen Ashish Agarwal, the celebrated case law, right? Finance Act 2021. There are so many litigation. I myself have filed around more than 500 writ petitions before Honorable Calcutta High Court, and I feel that it is one of the most litigious. I think definitely sir will agree that Finance Act 2021, they have brought a sea change in Section 148 provisions, and that is one of the most litigious. Till now, we are continuously filing writ petitions in relation to some legal points or the other. And now we see Finance Act 2024, they are coming again with some changes. So again the cutoff date is again very important. 1st October 2024. So any notice, if you're receiving notice now, again the previous and the provisions that are applicable right now, that will be available, that will be applied. However, 1st October 2024, any notice if you're receiving for 148 under section 148, that will be covered by the Finance Act 2024. So there are certain changes with respect to the specified authority. I was just talking to my father. Just yesterday, there was a matter before the divisional bench, and we have actually there was a legal point that whether or not the approval has been taken by the specified authority or not, and on that aspect, the notice got quashed. There were 3 cases, and the notice was quashed, and now I see that again there is an amendment that the specified authority has itself altogether changed. So these are certain amendments that they carry out, seeing the judicious as to how the before the judicial forums, how the SSC is actually taking up the cases. And again, there is certain lacuna also that the assessing officers also they are carrying out, because of which again the cases are going through the judicial forums. So this is so now the specified authority is only additional commissioner and joint commissioner. So they are the only. Previously, there was a cap that if let's say 3 years, if more than 3 years, then a principal chief commissioner of income tax would be there, and if it is less than 3 years, then principal commissioner of income tax would be a specified authority. Now they have made additional commissioner and joint commissioner as only specified authority. So there is nothing that there is no, because of this legal lacuna, they have probably brought this particular change. Section 148A also, this is, I would say, a welcome move. There are relied upon materials that will be given to the assessing officer in section 148A notice itself. So there will be an opportunity that will be given to the assessors. They can file their opportunity, they can file their reply based on the relied upon materials that they have, the assessing officers have shared. So this is, I suppose, this is a welcome move. Timelines, again, as sir was dwelling upon, the timelines has changed now 3 years, 3 months for those cases which is below 50 lakh rupees. So you cannot cross, and no notice can be issued beyond 5 years, 3 months. However, if let's suppose your case is well within 50 lakh rupees of the escaped amount, then there cannot be any notice more than 3 years, 3 months. So this 3 months is a relaxation period that they have offered. I do not know what is the logic. I think sir will explain the logic behind it. But what I understand is there is a certain relaxation that has been given to the assessing officer of 3 months. So beyond that particular timeline, the notice cannot be issued under section 148. Again, as sir was saying, the search related cases, the tax implication is 60% less. That is a welcome move. And also there is a penalty which is applicable of 50%. So you have to pay tax of 60% plus penalty of 50% will be applicable. And
only on registered people. Okay.
I stand corrected. So only tax of 60% is applicable and penalty will be applicable on addition. So basically these are certain welcome moves, but again coming to the main why did all these amendments of previously Finance Act 2021, just 3-4 years back, we have seen a sea change. The search related assessment was merged into section 148 assessments, but now again there is a block assessment. So again they have demerged the whole thing and they have brought the block assessment. There are certain small amendments in relation to salary employees. So they have given a standard deduction of, they have increased the standard deduction that is now applicable for 50,000 rupees. It has been increased to 75,000 rupees. That is for new regime. Again, there are certain amendments in the charitable trust also. Again, 1st October 2024. So they what they want is section 1023C. They want all the provisions to be in line with section 12A and 12AB. So they are trying to merge. So any application after 1st October 2024 can be made under section 12A or 12AB. So there will be no 1023C applications that can be made. However, those applications which are already there or those exemptions which already a trust is carrying, that will be there in line. Commissioner of Income Tax, again, they have been also given a power to condone the delay. This is again welcome move. Previously, the taxpayers were facing a lot of difficulty, and I have seen Income Tax Tribunal. There are several orders on this aspect only. So I think this amendment is very much needed. Charitable trust now, as I was saying that now the mergers were not possible. Now the Income Tax Act has actually brought in this particular provision where same or similar object trust can be merged with another. And I think this is a positive change. We should welcome this particular change also. There are certain amendments in relation to business head also. I'll just quickly go to the amendments. There were previously residential houses. People were trying to, the residential houses, they were trying to tax their income under profit and gains from business and profession. However, now there is a clause which says that residential houses, I repeat, residential houses can now be taxable only under house property. So there is no way you can go ahead and take out certain expenses, and there is no way there can be any tax avoidance in this particular through this particular amendment. There is again a small change in relation to the pension scheme. The 10% expense that has been increased to 12%. Also, if there is any settlement amount that you have paid for any contravention that you have made and you have paid outside, people were trying to take the benefit by taking the benefit of the expense that has been paid as a settlement amount. So that is not allowed, because again this is as per the contravention, any penalties or any contravened amount cannot be allowed. So this is again they have inserted in this Finance Act 2024. Sir has already dealt with enhanced remuneration. So previously we have seen, while I was doing my chartered accountancy, we used to solve several illustration based on this aspect with regard to the enhanced remuneration that has been given to the partners. So now it was high time that the remuneration, this aspect has to be increased. So they have increased by 6 lakhs and again 3 lakhs. So sir has already explained as to the if your book profit is more than 6 lakh rupees, then there will be a 3 lakh rupees remuneration or 90%, whatever it is. And if in the second bracket is remaining same. This government is trying to call upon the foreign shipping companies. They have launched the presumptive taxation scheme. That option is again allowed for the foreign shipping companies only. So there is no domestic shipping companies that are allowed for presumptive taxation. Now the provision has been inserted only for foreign shipping companies. There are certain changes with respect to the PDS also. I will just take you through the important ones. Section 194J and 194C. So let's say suppose if there is any work which comes under section 194J, so the higher rate, 10% will be the TDS rate which will be applicable for you, and not 194C rate. So this is again the amendment that has been carried out, which again that is a clarification amendment. So it is always better if it is falling under section 194J. It is better to deduct tax at the rate of 10%, 194J, not 194C. There are certain rates amendment that I think you can look into. Section 194IA, that is a clarificatory amendment, I would say. It is actually property wise. So 194IA is applicable when if TDS will be deducted when the property value is more than 50 lakh rupees. So consider a scenario where there are 2 or 3 transfers. So people were actually taking it on the basis of the transfer. So it is actually will be calculated. If your property value is more than 50 lakh rupees, then the TDS will have to be deducted under 194 ITBA. Again, 194T that has been inserted every time there is in the Finance Act. When we see there is PDS provisions which is actually newly inserted. So there are some aspects which is actually coming under the PDS provisions. This time 194T, remuneration to partners. So if you are paying any remuneration to partners, there will be a TDS rate of 10%. And the interesting point is 20,000 rupees if you are paying in a year, then you have to deduct this TDS. So I think I feel that this threshold should not be given only. 20,000 is actually nothing. So this threshold amount maybe they could have changed a little bit. Apart from that, there are small provisions in relation to TDS. Whereas Sir has delved into the section 276B in relation to the prosecution decriminalization. So let's say suppose if you have paid tax and interest and that has been paid before filing the statement, then the said amendment actually there will be no prosecution under those circumstances. And I feel there are several cases which are there in relation to this particular section 276B. And I feel this should be retrospectively applicable for those SSCs who have actually discharged their interest and tax liabilities before filing the statement. So angel tax Sir has already discussed. That will be a repetition. Yes, best judgment assessment again. CITFEs, they have been again given a power to set aside the cases for de novo assessment. So I think that is all from my side. Sir has already dwelt into the aspects of the amendment in detail section wise. So thank you. If there is any question, we are open to it.
Hello. Thank you, Ritesh. I think now the house is open for the question session. Rajesh, do you have any question? Please.
My dear sir, so many litigations in the High Court. Yes. After the post-agrawal assessable cases, the government is come with the intention to wrap up to marginalize the reopening assessment year 10 years to 5 years. And they again agitate before the Supreme Court, this pending on the 23rd of July, that it should be 10 years by relying on TOLA. So what the CGI and Supreme Court of India, how they take to this government intention, it should be better prospect for the Supreme Court. We have to see.
We have to actually see how Supreme Court will take these things. As judges, ultimately they are humans, right? So they also understand how things are taking place. So let us see. Let us wait for the Supreme Court order as to how Supreme Court will take this.
There is nothing around 43PH SLFS.
No, there is no amendment, and that is actually that was promised, and I was expecting that there will be certain amendments, but there is no amendments as such, and even the budget speech, they have not disclosed anything, nothing at all.
Any question from the house? So then I will wrap up the session. Or anything can be discussed.
Just elaborate a bit on the Viva Infrastructure scheme.
Viva Infrastructure
I can give a little bit of insight.
Communication has not come.
It will be notified later on.
Will be notified later on.
Literacies are not available.
So I will just give you certain insights in relation to Vivad Se Vishwas scheme. So before 31st January 2020 was a specified date in Vivad Se Vishwas scheme 1. Now the specified date is 22nd July 2024. Now before 1st April 2020, if your appeal is there, right now also the appeal is pending and that appeal has been filed before 1st April 2020. So the tax amount will be 110% of the tax amount if you pay, that will solve the process. Penalty, interest or any fees in relation, disputes in relation to penalty, interest, fees, that will be payable at the rate of 30%. Right? Now, those appeals which are pending from 1st April 2020 to 22nd July 2024, those appeals which are pending before 1st February 2020 to 22nd July 2024. Now, in those cases, the tax amount you have to pay is 100% if there is a disputed tax amount, and again the penalty and interest and fees, if that is the case, then there will be 25% of the amount that has to be paid. Now, again, as we were seeing that in the Vivad Se Vishwas Scheme 1, if you have a favorable order and the department has actually filed an appeal, so that will be a half of whatever the slab rates are there. So this is actually, again, the specified date that I have mentioned already is 22nd July 2024. So any appeal which has been filed before 22nd July 2024, only those appeals which will be covered as of now. But the scheme has not yet been notified. Let the scheme come, but I don't think so. There will be change in the specified date as such. Also, there is one slab which I was going through the slabs. So there is also payment timelines. That if you pay before December 2024, there will be a certain amount that has to be paid. After which there will be a 10% increment that has to be done. So that is what I was able to understand from the clauses that I was going through the Vivad Se Vishwas Scheme 2. Let the scheme be notified, then we will get the detailed insights.
This registration procedure in new DG up to amended 30th June last to get a circular. As per budget scheme, it is again last October. One condition is towards this comes.
No, I cannot follow you.
What registration of charitable trust? It is a new DG, under new DG. New DG means from if the trust is created before the year 2020. Trust is running, but they have not applied for press registration.
No, registration can be applied even after that. Now the point is that under the amended law also, amended law also denote that you cannot claim press registration. Only thing is that 1023C application cannot be made anymore. The applications which are pending can be disposed of by 31st of October. But ultimately they shall be dealt with under section 12AB. So therefore 12AB 7 has been brought in, wherein all the provisions where 1023C approval has been granted, that will continue to operate for the pending period for which the approval has been granted to you. Thereafter you will make a fresh application under section 12A once that expires. So that is a new amendment which they are talking.
Sir, my question regarding Vivad Se Vishwas. So the assessment order had to pass on 30th June.
30th June which year?
30th June 2020.
Okay, you have the pendency of
thereby limitation on 30th 29th July.
Yes.
The effective date of the Vivad Se Vishwas is the 23rd July.
It is pending. It is pending. Yes.
Yes, it's pending.
It's pending. It's pending.
Because time is not
Time for filing appeal is there. It's pending.
is not at this time.
Even it's like the court orders.
Yes.
বলছি এসএসসি এর ওপরে পোর্টালে বসলা এসএসসি did not file appeal. Department also didn't go for recovery. Okay. And the SSC added the because
No.
He has not disputed.
He has not disputed that. Yes. No, he has not disputed.
If the order has not been served on you, and you claim that your time to file appeal will operate from the date of service of order, which happens to be after 22nd July, then you miss the bus. Only if say your tribunal appeal is disposed of in a capital 15th June, and you have the right to file the appeal before the High Court within 4 months from the date of such a dismissal. You shall be considered pending. So your right to file appeal or the pendency of appeal will be considered for the purpose of you availing the benefit under Vivad se Vishwas scheme.
The demand delays to 7 years back.
It doesn't make any difference.
These are fancy figures.
Because you have not filed an appeal. There should be a tendency of a proceeding in the form of an appeal, either before the CITBA or before the tribunal, or there should be a writ pending in the High Court, or an appeal should be pending in High Court or Supreme Court. There should be some proceeding relating to that demand pending, which will give you the jurisdiction to apply for Vivad se Vishwas scheme.
Sir, just to add on this particular point, I think what Sir was saying, maybe 30th June is the assessment order date. It is better to file the appeal just in the 20 days timeline. If you fail that, I think then.
No, even if you fail, you can evade. You can evade. Because there is a provision in the old Vivad se Vishwas scheme.
There has been clarification given there.
As permitted of the house property, if you are taking out the house property, it is a house property. Suppose that I am going to commercial property. Then it will be treated as a house property or a business.
So, see, as far as doing business in real estate has not been considered a non-business. There is a specific provision for charging to tax income from house property under section 22 of the Act. If your purpose is to own a property and let it out, then that property shall be treated as income from house property. But if your purpose is to do business, say you have purchased a commercial property, and in that commercial property you have set up electricity, supply of electricity system, supply of water system, supply of transmission of telecommunication, supply of all these, so you have created wherewithal, which is not a letting out of the property per se, but it is an entire commercial complex which comprises of so many facilities where due to expenditures are incurred and these are all recoverable. So you are doing it not for earning of rent, you are doing it for the purpose of earning a profit. So there you can claim that you are doing a business. Karnani Properties case of the Supreme Court has not been overruled. In the Karnani Properties 82 ITBA 368, the Supreme Court has held that all these amenities which are independent of the property per se falls in the commercial activity. So if that be so, then it can be still treated as income from business. But if it is a property per se, Chennai property per se, which was held only because there was an object clause in the memorandum of association that you can purchase the property and you can make it out. So therefore they said that since the object clause of the company says it can do it, so it shall be amounting to business. That provision, that decision of Supreme Court has been ordered.
What is the intention of the amendments?
The amendment is this only, that property computation gives you 1/3 reduction in respect of your gross receipt of rent. But in the business, you borrow money, you pay interest, you employ people, you pay salary, you go watch and work, you pay salary, you have electricity system, where you pay electricity charges, you have the water system, where you employ people, you intercompany expenditure. So these are all expenditure which is relating to rendering of so many services to the inhabitant of that building, and in lieu of that, you are charging them on the basis of the consumption made by them, on the basis of services utilized with them. They are not the standard services. They are services dependent on them. So somebody wants transmission for 1 hour, for that you are charging. Somebody wants transmission for 4 hours, that you are charging. Somebody asking for high voltage, you are charging for high voltage. Like that, lots of commercial assets he has established through that he is rendering several services. So therefore, this is nothing but doing of business. See, you have a convention center. You have got a hotel. All these are the commercial property. They are sign of commercial property. So they are not doing business.
Hello.
It is still on.
It is not amended. It is there. I think we have discussed in threadbare regarding the Finance Bill 2024. Now we will wrap up. I will just a small announcement that all of you know that our member Rajesh Sani has done a very good result in chartered accountancy, and at the age of 20 and a half, he has cleared the CA exam. It's really a big achievement for us.
I'll give my bouquet to Bharat.
And for this, today's total refreshment is being sponsored by Rajesh. Because I want to teach everybody. Thank you. But it is our duty to felicitate his son also. We will definitely call him and we will felicitate him. Thank you for patient hearing.